Welcome back. We're going to be looking at bear market survival guide. There are lots of lessons you want to live by. We're looking at the 8 lessons stipulated on this article by Daniel Phillips. We're live on Alexandria altcoins. So going by the recent deep in the crypto world, you want to understand what some things you need to note. So guys, we encourage you to click on the red subscribe button down below this video so you get notified whenever we drop updates, and also you want to click on the like button if you find our uploads beneficial. And also lastly, you want to share this video and drop your comments and your feedback in the comment section. We'll try as much as possible to interact with you all. Back to the news, it says bear markets can be daunting time for any cryptocurrency holder or investor, since they typically lead to sustained, often significant losses across the board for most digital assets. So while it's true that no market can keep going up forever, bear markets present opportunities for their own and can be an excellent time to correct any mistakes you made, do your research, and ready yourself for when the market recovers. Here we break down 8 ways to make the most of your time and money in the next bear market, and putting yourself in a strong position when the market eventually picks back up. This article is intended to be used as an informational purposes only. It's not a financial advice. You still need to make your own financial advice and do your own research. Now, sticking to the plan, if you're anything like that, most people, when things go pear-shaped, all plans and strategies go out of the window. But if there's one thing that is of the most importance here, so when investing and trading, is sticking to the plan, presuming the plan is well formulated. If you've ever thought to yourself, as soon as X falls below Y price, I'll buy it, before later failing to stick to the plan, then you're part of the majority. However, it's easy to make such plans when the market is strong. So these are some of the perks you want to know. And yet history has shown that those that have the goals to pull the trigger and buy when the market is blood red often perform the best long term. Take for example Bitcoin's collapse from over 20k in December to under $4,000 in December. So what proportion of people had pledged to buy in next time it dips during X? So a vanishingly small minority. So you can see these are some of the perks you want to know. Also, considering the dollar cost averaging method helps a lot for users, where you get to buy cryptocurrencies at a specific or as a autopilot basis. So trust in the fundamentals is some things you want to know. The crypto market is full of opportunities, and even though quality projects can indeed go on to achieve often transient success, those that have all the fundamentals in place generally stand the best chance of surviving the bear market to come out stronger. So there's a picture representation here. Remember how things looked in 2018. So it's currently loading up. We're gonna be checking it out soon. So, but meanwhile, say if your project genuinely meets your these criteria, then odds are it will perform well in a bull market. There's some things to look out in projects: strong team, partners, value adding backers, strong liquidity, top tier exchange listings, potentials, and a great market fit. So if you take note of these major criteria, you might be able to save yourself from lots of DeFi scams, as well as other pegs going on in the cryptocurrency world. So we're going to be looking at this pictorial representation. Talks about BTC market value symbols, price as it was some years back in 2018. You can see the values of this cryptocurrency and how much they went. We have XRP, BTC, we even have Litecoin, Cardano, Monero, and loads of them. Ethereum was about $116. And thinking about how much you would have made if you had invested in any of these cryptocurrency now. So those are some of the packs you want to look at. Then we also have excellent. We have loads of them. So you always want to make your own research. We have BNB2. So that said, a project's fundamentals can change considerably over the course of its lifetime, but you need to be following up with this project, not imputing sentiment. Brush up on your knowledge. So although bear markets certainly make it more difficult to turn a profit while trading on investment, you do often have a much needed reprieve from the mania that is a bull market. So you always want to know which projects are meaningful as regards the rate at which they are able to come up, or the rate at which people now decide to still hold on to them. So this time can be used to get a better understanding from the market, see what works and what doesn't, and better prepare yourself for the next bull market At the very least, it can give you the time to reflect on your previous decision investment mistakes. If you're particularly bullish on a particular vertical, such as second layer solution interoperability platforms, some of the useful things you may want to brush up on might be include technical analysis, fundamental analysis. Technical analysis enables you to identify market patterns and indicate a good entry exit point. Fundamental analysis enables you to spot undervalued projects with a long-term growth potential. We have sentiment analysis to understand the general tone, fear, and hype in the market. We have risk management to learn how to manage your risk, budget, and diversify your investment. We have trading strategy, research and test various trading strategies to be competent enough to deal with more opportunities. By ensuring you are properly informed and well equipped to spot and act on potentially lucrative trading. So understand that not everything will collapse. So on the bear market, can be a disheartening time for cryptocurrency users who have to see their portfolios experience gut-wrenching losses over what could be a very short time frame. While it is true that the vast majority of cryptocurrency will see dramatic losses, the ability to recognize which ones will withstand the overall bearish market is something you need to know. So after all, several cryptocurrencies, including Loom Network, Metaverse EP, Binance Bitcoin, were able to buck the trend and retain most of their value throughout 2018, one of the worst bear periods on the record of cryptocurrencies. So you need to scoop on discounted gems which are very low valued. So between 2018 and 2019 and 2020, many lost more than 90% of their value in these 3 years. Zooming in on BTC, it fell from 20K to $3,000. Said BTC would then go over to gain 2000% with its high profit. So a few traders actually bought BTC at very close to this low point due to psychological difficulty of purchasing an asset after such a sizable drop. Also have identified which are simply suffering due to the prevailing bear market and which are seeing a permanent sell-off is easier said than done. You need to put idle assets aside. One of the biggest mistakes cryptocurrency holders make is holding. So though many cryptocurrencies have demonstrated a long-term bullish trend that has generated fantastic returns, you also need is not the most efficient use of capital. If you are leveraging SafePal or DeFi platforms to generate a yield on these assets, you can grow your balance while you wait for the crypto market to pick up again. So decentralized platforms like Oreo Money allow you to earn APYs on your stablecoins, whereas savings platforms like Nexus or Celsius block fee often give you 6 to 10% annual percentage yields. So these are some perks. For example, if you're sitting on $10,000 worth of stablecoins and zero point 0.1 BTC, and you simply hold this for 2 years, you will still be left with exactly 10,000 and 0.1. So it's usually more wiser if you tend to invest this a locked assets or flexible savings. Like on Binance, you can there's a feature that allows you to get rewards on your coins. And also, you should not forget to short. In a bull market, simply buying and holding most of fundamentally sound cryptocurrencies and digital assets generally leads to a position of profit. It's usually a good idea to buy low and sell high. The exact opposite can be said for bear market, where selling early is typically best, and the trading methodology shifts to selling high, buying low, and repeating where possible. So those are some of the things you want to know. So remember, if you are fundamentally bullish on certain cryptocurrencies or the cryptocurrency industry as a whole, almost all cryptocurrencies will likely experience a downturn in a bear. Substantial gains can be made by trading on the short side where you overturn. Also, time to network. As with most industries, strength of your network can strongly influence your odds of success. So you want to have a good network of individuals and more. And further reading, you have looking on to go on further. One step to put yourself in the best position. Having countdown clock, BTC, and cryptocurrency market in general tends to operate in 4 year cycles, while BTC having event typically occurs roughly in the middle of a cycle. Historical snapshots, custom portfolio guides, and more. So, guys, that's all we have on today's news review on our tips. We hope these lessons are beneficial to you. Stay tuned for more Jabba keys. We do, however, wish you subscribe to our YouTube channel so you get notified whenever we drop our beneficial updates. Stay tuned for more, guys. Peace out and one love.